Good morning, good afternoon, good evening, whenever you are watching this week's video. How y'all doing? We are into the thick of things. Into the thick of it. Tax season is tax seasoning. Software and technology are doing what they're doing. We have done what we needed to do extension wise for all our S corporations and partnerships. And we just getting through the stuff, getting through and getting them the return. So I thank you if you're one of my clients. Thank you for your patience as you are on both sides. We are doing both personal and the pass-through entities at the same time. Stuff on my desk. I am giving you the best that I got because everybody deserves that one-on-one touch that I give them with the video. And so therefore, if you're waiting to hear from me, know that each and every one of you is going to get the same service that I give on a regular basis. It is just the time in the season where everybody's like, oh, I gotta get my stuff in before this time deadline. And those people that got theirs by the pass-through entity deadline, we're finishing those and getting them on their desk. So I know that I told you 2 weeks ago, because last week we got to the beginning of March. And speaking of March, can y'all freaking believe that the weather is weathering the way it is? Like, I mean, I know the cherry blossoms will be coming here soon, right? But didn't we just have some snow not too long ago? I mean, is anybody else like, I'm not going to complain. It just went, this current week, it went hot quickly. And so it's just me anticipating, well, if it's like this, and I know we'll go back and we're in winter, y'all, because we don't come out of winter until March 21st. We do not have our spring equinox until then, okay? So we are still in winter. In it. Last couple weeks, we in this winter. And we got beat with some snow. Are y'all not? The season's confused, y'all. That's all I'm going to say. We confused. If we watching the news and stuff like that, it's just a lot going on. Even the trees and stuff like, yeah, we feel like we want to come outside now, so we going to come outside. And so, random thoughts that hit my head. I'm wondering if anybody else feels this way. Needless to say, I told y'all 2 weeks ago, we were going to go back and we're going to visit overtime and tips. How they being taxed. Overtime and tips. I'm going to have to table that. Why? Because somebody slid into the secure portal and asked a very valid question, which lets me know that they looked at last week's newsletter. And in the newsletter, the second article caught their attention about what? I might can get some penalties and interest back. I might can get some of the money that I paid to them people back. And so I said I would break this thing down, and I probably would do it in a weekly video because y'all get this information before it gets chopped and screwed and my team put it on social media, right? So this is not being streamed to YouTube. This is not podcast material at all. This is exclusive in your mailbox every Wednesday because y'all are them special people on our mailing list that y'all get this breakdown before they start to chop and screw it and give it to the public. Okay? And then eventually it gets on YouTube as a tax tip, but y'all get it hot off the press, I guess. Is. All right? Needless to say, let's jump into it. I did a presentation because I feel like I talk better and can break it down. And there's some pretty intricate timelines on this conversation that we need to go through. All right. I went and pulled the actual court case because I was like, what happened now? I know what the snippet said, and I know how it gets dressed up in an article, in a newsletter article. So I didn't want to mislead nobody. So I said, let's go pull the case. All right. Now here we go. Kwong, it's probably Wong versus United States. All right. It was filed in the U.S. Court of Federal Claims, November 25, 2025. So this was a couple months ago. It's a landmark ruling on COVID-19 emergency relief, tax penalty refunds, and extended filing window that may, I need y'all to see my face now. It may open the door for penalty abatement claims. The period of time we're talking about, January 20th, 2020 through July 10th, 2023. Now, when they stress dates like that, this is crucial. Why? Because you're going to find out there's several things that's going to be discussed in this. We're talking about when you got the period to file to claim a refund. There is a distinct period of time in the statute that you have. Now, this is going to take us a little bit out of the statute, but it also tells us something else. That, yes, we can claim penalty abatements. In fact, the IRS is supposed to be automatically giving out first-time abatements now. We shall see how that happens, okay? Under this administration, this is just something that's recently released. However, we got several different things going on in here. Time frame, you're going to learn when you can have the time frame to file, and then you're going to have to understand what's going on with penalties and abatements and ways that you can actually claim a penalty and abatement, right? Because we got two types of penalties and abatements. We talked about this when we did our breakdown on resolution, because this falls into that area of resolution. And so, therefore, penalty relief, right? Because interest gets adjusted based off of that penalty. Normally, interest is not removed, but it will get adjusted if you overpaid in interest because they revoke or abate a penalty. So keep that in mind. So we're going to go through this, and I need y'all to keep dates in mind. This is why we did a visual, okay? Y'all probably like, just get to the sauce, Patrice. I'm gonna try my best to stay on the sauce. All right. High level of the case. This is what's going on. Terry Wong, sole owner of a real estate business, sought refunds for penalties for 2007, 2010, 2011, 2015, 2016. Way before we even hit Panini levels, okay? The IRS disallowed $2,315,017 loss from a 2005 transaction, triggering additional tax liabilities and delinquency penalties across several years. Y'all see that? They disallowed $2.3 million. The court granted in part and denied in part the government's motion for summary. So, what was going on here? So, we talking 2007, 2010, 2011, 2015, 2016. So, part of the claims were denied. Part, the court said, all right, we see you, we on your side, right? So, what did they say? Kwong's 2007, 2010, and 2011 claims were found to be filed timely. I paused there because I need y'all to understand. Time frames matter to the IRS. That's why they stressing dates. They found that them first three early ones were filed timely. The last two, not so much. All right, let's do our thing. All right, this is what happened. Wong buys out co-owners, refinances property, and claims a $2.3 million loss on his tax return. He carries the loss forward. NOL, we can do this. 2007, 2010, 2011. He leveraged the freaking tax code. This back in 2005. Right? Then 2012, IRS audits the 2005 return. And y'all probably like, what? Patrice, they didn't, hey, they said $2.3 million. What? You claimed a loss? That's, you carrying it forward? We want to look at that to see if you did the calculations correctly. All right? They assess additional taxes, and so they disallowed a loss altogether. They say, boom, we didn't audit this. This thing, more than likely somebody was like, this thing looks excessive. They disallowed a loss, and then they go back and assess additional taxes and delinquency penalties for all effective years. Now, why is this? All right, let's keep this in mind. This is what they did. This is what he did. He claims a loss in 2005 that he can leverage all the way up to 2012. Somebody said, hey, what's going on? Because you not paying no taxes like that. So what happens? They go and do the research. Oh, this go back all the way to This when you claimed it, let's go see if you even calculated that loss correctly. And then they said, nope, you ain't do that. You ain't do it right. So then Kwong significantly under withholds taxes both years, 2015, 2016. IRS assesses underpayment penalties. Now, I'm going to tell you, out of all the penalties I don't like, I'll take a failure to file penalty. I'll take a failure to pay penalty. I don't like an underpayment penalty. Why? Because they don't like to give up penalty abatements for those that often, and they definitely not giving up that interest. I don't like an underpayment penalty. Okay? I do not like an underpayment penalty. I don't like underreported, even worse. So I don't like an underpayment penalty. This means you didn't withhold, and what the rules are for withholding is, you'll hear me talk about this on your tax return. I'm comparing, if you ever had to do a balance and it's over $1,000 and we're comparing 90% of the current year's tax to 100 or 110% of the previous year's tax. And we're taking whichever one is lower and figuring out, did you withhold at least that much money? Because you got it. So now y'all know, hey, I got to be withholding at least what I did in the previous year, so I don't be having no issues. I don't like an underpayment penalty, and I dislike an underreported, even worse. Them two. Failure to file, failure to pay, I get it. Okay? I get it. This is why I try to do extensions to keep you in compliance. Because I don't want a failure to file penalty, right? And failure to pay, if you got to pay until you get that penalty till you pay it in full. So when I rank my penalties I don't like an underpayment penalty. It ain't happen. I don't like an underreported penalty, and I don't like a failure to file penalty. That's why I do extensions, because I need you to be in compliance. Okay? And let's go back into it. And in 2016, so we talking roughly about $6,000 or $7,000 that and underpayment penalties. Boom, just because he ain't withhold enough money. Then Kwong files an abatement request for all tax years, all 5 of them. He go back and be like, "Give my money. I'm not playing with you." IRS disallows 2007, 2010, and 2011 and 2020. Why? Because they looking at the window like, what? But there's other rules that go along with can he, what triggers it, and can he do this, right? And I'll get to those at a different date. Kwong filed suit in 2023. Kwong filed suit in the Court of Federal Claims in February before the COVID extension deadline of July 10th, 2023. Now, all right, we talking 2020, remember them dates. January 20th, 2020, July 10th, 2023. He does his claim. He's like, y'all play with me. I think y'all wrong. The government argued that Kwong claims for 2007, 2010, and 2011 were untimely. The IRS disallowed them in 2020. And there's a standard 2-year window, right, that exists for going back and when can we claim stuff. It expired before Kwong filed suit in February 2023, roughly 2 years and 3 months later. They be paying attention to that statutes at certain times. I bet you they ain't always catching it with the fall off, but that's neither here nor there. Because it's a 10-year collection statute. The COVID-19 emergency release statute automatically extended his filing deadline to July 10th, 2023. They was playing in his face. But he got more time. Kwong said, y'all trying to disallow it, say I ain't doing it in time and all this kind of stuff. Y'all trying to play in my freaking face. I don't got time with it, IRS. This is what's going on with the statute. Section 7508A, and this is what they're talking about in the article we gave you. Section 7508 allows the Secretary of the Treasury to postpone taxpayer deadlines during a declared disaster. That's exactly what they did during the Panini hours, right? The Panini days. The version the court applied includes an automatic mandatory extension that runs from the earliest incident date of the disaster to 60 days after the latest incident date. Remember, we had a whole bunch of stuff going on during that time period, right? So January 2020, right? This is, if y'all remember 2020, we go into and we doing tax filing season, doing stuff. We got extensions and we had more time and stuff closed down and they locked us up. I say locked us up. Lord, please don't lock us up. Locked us down, and then people had to go home. Just do a flashback real quick. The disaster declared earliest incident date report period starts. Disaster continues. Extensions run through the declared period time. 60 days after that time period. Once they said, hey, we out of danger, 60 days after that, that's when stuff ends. Under this, in plain reading, the COVID extension ran from January 20th, 2020 to July 10th, 2023. 60 days after the declaration was closed on May 11th, 2023. And he said, don't be playing in my face. I still did it in time. Why the COVID declaration extended the deadline? March 13th, 2020. And I remember this clearly because it's so close to my birthday. And I left the government March 31st, 2020. President declares a nationwide emergency on March 22nd. California has declared a major disaster beginning on January 20th and continuing. So they backdated that joint. The word continuing has meaning. The court rejected the government's argument that only January 2020 was specified. If that was the only date, the declaration would not have added continuing. So remember, they backdated it because if y'all remember that time frame, people was getting sick around. Initially, the kids started getting sick around Thanksgiving time, 2019. But we ain't here to argue about what really went down. FEMA formally closed the COVID-19 period effective May 11th, 2023. Now, I won't lie to you. We was back outside. I wasn't even paying attention that they formally closed it May 11th, but that's probably because after all this time they had done enough vaccines. They did vaccine 1, they did vaccine 2, and was out here in the streets. That's probably what they based that on. May 11th, 2023, they said, all right, we good. We out of this. So they had 60 days from that, and that's how we get the July 10th deadline. Okay. Now you like, but tell me how I get my money. You right. All right. Years of COVID disaster, we had more than 3. Extended deadline, July 23rd, 2023. When did Kwong file? He filed his complaint February 2023. Before the deadline, making all 3 of these timely. Right? The court said, you right. Our bad. What the court denied was 2015 and 2016. They abandoned Kwong's attorney for. They abandoned the penalty abatement for the underreporting. They abandoned it for 2015. They abandoned it for 2016, and then they say he did an untimely overpayment. Kwong made a $400,000 estimated payment for 2016. The IRS transferred the overpayment to cover his old balances because that's what they be doing, right? Kwong needed to challenge this by April or November of 2019. He filed in 2020. So now understand when I be telling you, y'all specify. He said it was for this. The IRS said, no, you owe us a bunch of money for this previous year. They took that money and applied it to an outstanding balance. I think he's going to have some more stuff on this, but we're not here to talk about that. We're not here to talk about that at all. How come this applies to penalty abatements and how this could apply to each one of us? The court rules establish a clear legal basis for taxpayers who may have missed the penalty abatement deadline during that period of time. The window was real. We had, right, from January 20th through July 2023. That was the time that we were under this emergency, right, this declared disaster, all of us. IRS regulations do not override the statute. This is important. The IRS own regulation capped a mandatory extension at 1 year, but the court held this misreads the statute. Under Loper Bright, courts exercise independent judgment and need not defer to agency interpretation. So the agency can't be like, hey, no, we meant 1 year. When in reality, we had a disaster and it says, hey, up through 60 days after the disaster end, you can, that's when the window is open. Don't be trying to play both sides of the fence here, right? Any deadline falling in the extended period may be revived. So, but we only got a short period of time because this just happened in November 2025. And now he argued this and they like, wait a minute, we on your side for some of this. If a taxpayer's 2-year window to file a refund or abatement claim fell within this time period, January 20th, 2020 to July 10th, 2023, the deadline was postponed and a late file claim may still be timely filed. Meaning, hey, I still might got some window when I ain't filed my return, but I can actually, and it fell between this time, I might can actually get some of them refunds. They might not be disallowed because we had this state of emergency. Hey, I might can ask for this abatement if I qualify. All right, this is how you do it. Step 1, identify the tax years with the penalties. You need to look, did I have some penalties and interest that happened between January 20th and July 2023 that I can maybe see if I can get something off of it? Step 2, notice date. Pay attention to the notice date or the 2-year clock. And I probably got to come back and talk about the statutes so that y'all get a better understanding of what we mean there. Check if the deadline was between this range. And then we can actually put in paperwork, right? On form 843. That's the penalty abatement request. If I remember correct, form 843, file the request, and we got to cite section 708A and Kwong. Meaning, hey, I'm coming. The reason why I'm asking for this, right, is because, hey, he just did this case and I'm trying to stay in that window. What the court confirmed, the COVID-19 disaster declaration automatically extending filing deadlines all the way to July 10th, 2023 for those years under the 2019 version. You got to review your penalty history, identify any penalty assessments or disallowance notices issued during that time frame. Determine whether you fall within this 2-year window overlap. Hey, did you deny me during this time? Might open this back up because you shouldn't have denied me. You couldn't say, hey, well, you didn't claim your refund or you didn't claim your stuff in the time or you didn't file timely because we was in a disaster. I got time to do this. File or revisit abatement claims, right? You got to cite this case as part of your reasoning as to why you asking for this documentation back. The court noted that as of 2025, few taxpayers can still bring timely claims under the statute. So it's not a lot of people. Time is limited. It say consult a tax attorney, or you can come and talk to an enrolled agent or a CPA that actually understands the statutes to see if you have any specific facts that fall into this situation, right? So for all my people that was like, wait a minute, I can get my money back. We need to have a conversation. And I know you like, huh? We got to have it before July. We got to have a conversation before July. You got to share the letters. And if you're one of my clients, to go ahead and upload that stuff into the portal because it will help you out so that I can be like, okay, let me see the notice. When did you get the assessment? So we can start building it. I won't be able to start focus on it until we get out of the April 15th deadline. But when I'm reading it, I'm not going to lie to you. And especially if I don't already have a power of attorney on file for y'all. I will read it and then I'll start putting notes together and be like, all right, now we out of the season. Give me a week. Now let's put our stuff together. Because if I have the notices and I can see the notice, then I can start to put the facts together, the case together, and do what we need to do to actually fill out the form. And then actually start writing the correspondence, especially if it's a return that we've already prepared. Now, if this is not a return that we prepared, that puts you in a totally different situation. That should be it. Because during that time period, if you work with us, you have your correspondence thing already attached to it. We put an audit protection plan on yours for correspondence. That's what that falls into. A request for a penalty abatement, we could do that all day long. We just got to be able to put the case, make sure you even qualify, but keep in mind, we got to act promptly. Because and they saying few taxpayers can actually fall into the situation. So it's not just, hey, if you had to do a failure to file penalty or a failure to pay penalty or this, that, and the other penalty, that you can get abatement. Like, there's rules associated with this. And so I know the article, the way it's presented, was sexy and you ready to be like, I get my money back, I can get my money back, but it's always rules to it. And so I will go back and be like, let me give you a presentation on statutes so you can understand how the statutes ideally work. Because in a minute, then I'm going to take you all the way deep into a resolution situation. But I want you to have an idea of how statutes work so that you know, wait a minute, I might have something from 2023 because I'm in that window that I can still bring it forward, that I was just going to leave it alone and just be like, which has nothing to do with this particular case. But now that you know more about statutes, you may be able to present it. There are two types of abatements, like I've told you. First time penalty abatement, which is start to be automatic for us, and then reasonable cause abatement. And so I will also do a discussion to break down in further detail the differences between those two, how they work at the federal level, and how those things can possibly translate themselves and transfer themselves into the federal level. The state level. So I done ran my mouth for the week. Hopefully this makes sense. I did this presentation so that y'all can understand the case behind it. And I went and pulled the actual case from the court record so that I could get it summarized and actually present it so you could understand, all right, this is what really happened. This is the facts. This is how we can leverage it. This is what the court said. This is what the court disallowed. This is why the court disallowed that. And baby, we talked about net operating losses that get to carry forward and offset income, how we leverage those. We talked about really what could be the trigger, stuff that's excessive when these losses, come on. You don't want the red flagging in your business because your loss is excessive. If we can document and support it all day long, I'm here for it. Y'all know I'll go to bat. I'm here for it. But stuff that look excessive or something that I think is going to red flag, I'm going to tell you the truth. Hey, if this red flag, understand you telling me the story ahead of time, because the IRS could easily disallow this. Y'all saw. They disallowed. They went and took stuff and applied it to what they wanted to apply to get balances down because he incurred interest and penalties. They also did it because a statute was going to expire. And they was like, no, we got to put this money here. We in our 10-year collection statute. You're not going to use that money how you want to. There's other stuff to it. This is why I absolutely love the rules associated with resolution, understanding the statutes, and figuring out people's strategy. Everybody's story is a different story. How we put stuff together based on your circumstances is different, and it reminds me so much of auditing. It excites me. So I can even hear myself going crazy with it. It's a great marriage between accounting and law, and summarizing it in a way that's sexy. Let me know if this helped you. Let me know if this has more questions. If you got any notices or you remember you got some abatements and penalties from the mirrors, go hit me up. Say, hey, this is based off of what you said. This is what I know the facts are. You still have my tax returns in your portal. Let's get together and start strategizing on this. All right? Until next week, when I got to get it together. Next week, we're going to talk statutes. Then I'm going to go back to overtime and tips just to do it real quick. And then we'll go into real estate because somebody asked me a question about real estate. Holla at y'all. Peace.